So we have got the draft Treasury bond calendar that will take us through the 2026-2027 auction for those of us who are still interested in investing in Treasury bonds. The good thing next year, the opportunities of investments are quite very many. We have the Treasury bonds, we have the Sukuk bond coming in. So it's always important to see what tentative draft calendar are we going to have and how it ends up then impacting the kind of investments we end up having to make and the decisions we have to make. So I'm going to go through this draft calendar for the next 10 to 15 minutes, give you my insights. One thing I know, we are in late May. This calendar might change anytime soon, depending on what the debt office might see and the feedback they might get from the different people. But tentatively, where we are, this is what we have. Now, we have some good wins, and I'm going to start with the big wins for which people will be very happy with. The 25-year bond is coming back on the market. The 25-year bond, which was first introduced in 2025, last financial year, which was auctioned off 3 times. It was auctioned off in August, then in November and in March. It's one of the most sought after bond. It's coming back on the market, and that is a big win for many of us because it's a good bond. It's a long-term bond. Its yield has been good. Its coupon rate is 16%. That means someone who invests in the 20-year bond, in the 25-year bond, they are almost getting a 14.4% interest, net interest after tax. So last year it had only 3 auctions. So if you didn't have money in August or in November or in March, you had to buy it on the secondary market, which was a little bit hard. It's coming back on the market. That is a very big win. It's coming back. And this time around, they're going to sell it around 4 or 5 times. So for the people who have been looking for the 25-year bond and you are trying to buy it expensively on the secondary market, you start to prepare for it in the primary market. It was interesting to see how the 25-year bond has been playing around. The 25-year bond has been literally, it brought in what we call an inverted yield curve, where a longer term bond has a lower yield than a shorter term bond. The 20-year bond right now on the secondary market is trading, the 2043 20-year bond is trading at around 15.4%. Yet the 25-year bond, which is a longer term bond, which has a higher term risk, is trading at 15.2. That inverted yield curve was because of the scarcity of the bond. So if Bank of Uganda and the people at the Ministry of Finance are bringing it back, that is a good win for the investors who want to invest in the 25-year bond. That is a very, 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 very big win. And that means the more it becomes more in supply, the more we can access it at a price-friendly level. That's one. The second big win for me is the 2037 bond. That bond was last auctioned off in the financial year 2024-2025 as a 15-year bond. It had a 16% coupon rate. Now, this year, this tentative calendar is bringing back 2 bonds, the 10-year bond and the 25-year bond, which both have a 16% coupon rate. That's a good thing because you can invest in a medium-term bond or invest in a long-term bond and get a very good interest rate. So the 10-year bond, the 2037-year bond is coming back on the market. That's an interesting bond because it pays in May and in November. Only people who bought that bond in 2023, 2024 and 2024, 2025. No, actually 2024, 2025, we had a different bond. So the last time that bond was auctioned off was in 2023, 2024. And very few people have that 2037 bond. It pays in May and in November. One interesting thing is the current 10-year bond, the 2035, also pays May and in November. The new reopened, the potential bond they are planning to reopen, the 2037, also pays in May and November. You see? So that means we shall have 2 10-year bonds when they are both paying at the same time, in the same months. So for those of us who invest because of laddering, that challenges us. That makes it a little bit tricky. But at least it's coming back. It's a good bond because it has a very higher coupon rate, 16%, and it always trades at some good interest rate. Because right now, that 2037 bond, because it has not been on the market for a while, it has not been on the market for 2 calendar years. You want to see how is it performing right now on the secondary market. And when I check on it, and the last time it was being auctioned off, it was trading at a good discount, and a few people have it. We have been looking for it in the market, especially for people who want to buy it. It's trading at a premium right now, interestingly. Either way, every bond right now is trading at a premium. So that's a bond you should wait for the 10-year bond. Then the third win, which is also very important, is the 5-year bond. The 5-year bond, I do not know, maybe because this is a draft calendar, and maybe the people at the debt office and the Ministry of Finance and the Bank of Uganda might see this video and they have to think about it. The 10-year bond pays in May and November. The 5-year bond they are reopening, that was once a 5-year bond, also pays in May and November. That means for laddering, we are squeezing so much coupons within 2 months, the May and November. Sometimes it's good, sometimes it's not good. But one good thing about the planned 5-year bond, this is a draft, so things can change. But one good thing about this 5-year bond is it has a 10% withholding tax. Every single time we are buying treasury bonds and you're buying a medium-term bond, a 5-year bond, a 4-year bond, when it has a 5% withholding tax, that's a big win. It's good because it means you're paying less tax and you're going to get a good bond that matures in the medium term. So the 5-year bond they are planning to bring on the market was first brought to the market in 2022 as a 2032 bond. It has a 15% coupon rate and it has a 10% withholding tax. It pays in May and November. So that means by the time we shall buy it, if this is the bond that ends up becoming the 5-year bond, by the time we shall buy it, it will pay a coupon again in November. So you think about it, the win is it's a 5-year bond with a 10% withholding tax. What is not good with it is because the government is bringing 2 bonds that pay in the same month. Now, I would want to have, there are months which we are looking for bonds for laddering and for planning and for cash flows. We would want to see a bond that pays in March, a bond that pays in April, a bond that pays in September, a bond that pays in October, even if it was a 5-year bond. Now, the current bond that they have brought as they are proposing as the 5-year bond, it has a 10% withholding tax and it pays in May and November. It might change, we are yet to see. Then the other big win is the 2-year bond, the one that will mature in 2028. It's interesting that the people at Ministry of Finance in the debt office and the Bank of Uganda are proposing a 2-year bond that has a 10% withholding tax. It's interesting, I know. As I looked at it, I'm like, why? This bond was a 15-year bond when it was first issued in 2013. It has a coupon rate of 15.25%. Now, I rarely tell people to buy 2-year bonds because it's 2-year bonds, they have 20% withholding tax, it matures in less than 24 months. For the first time, if this bond, the 2028 November 16th bond, if it makes it to the final calendar, then we shall buy it. Now, of course, I know it also pays in May and November. So that means we have 3 potential bonds that pay in the same month. We have the 2037, the 10-year bond tentatively. We have the 5-year bond, the 2032 tentatively, and the 2028 bond that pays also in November. So we have 3 bonds that pay in May and November, which becomes challenging because you have to ask yourself, wait a minute, we cannot squeeze all the money into just those bonds that pay in May and November. But I'm happy with it because it's a 2-year bond. especially if it's a 10% withholding tax. You rarely get such deals. Imagine buying a 2-year bond when you're only going to pay 10% tax. For those of you who invest in this, you know that's a good win. That's good. I would be happy with it. I would be absolutely happy with it. That's the 2-year bond. Interesting. So for me, the 4 big wins are: the 25-year bond is coming back on the market. The 10-year bond, they are reopening the 2037 bond, May 2037. It's very good. The 5-year bond, which is May 2032 bond, and the 2-year bond, which is the November 2028 bond. Those 4 bonds are really good. Those 4 bonds which are being reopened are really good. They are potentials. The draft calendar might change. They might look at the video. They might get feedbacks from the other institutional investors and other policymakers, and they change. But so far, if that is where we are looking at, that means we have May and November will be some amazing month to make some coupons. For anyone who might end up buying some of these bonds, they're going to make so much money in May and November. And if you had invested in the 2035, which also pays in May and November, so you just tap and include part of that money on that income. Now, having talked about that, there are 2 bonds I'm yet to talk about: the 20-year bond and the 15-year bond. Why? Because they are going to reopen them. They're going to issue new bond. They're not reopening. That means tentatively, because of this draft auction calendar, the 15-year bond, which we know as the 2039 bond, is not coming back on the primary market, at least for the next maybe 2 to 3 years. The 2043 bond, which we know as the 20-year bond currently, is not coming back on the primary market, at least for the next 2 to 3 years. Let's start with the 15-year bond. Per the draft calendar, the 15-year bond is planned to be opened for the first time. A new 2041 bond, which will be called the 15-year bond, will be issued on 1st July 2026. 1st July, as soon as we start the financial year, we buy the bond. Now, because that bond is planned to be issued for the first time, or opened for the first time, on 1st July 2026, and the settlement will be on 2nd July 2026. Actually, there is a bond which is the 2034 bond. It pays a coupon on 2nd July 2026. So maybe some of the money they will collect from the bond issued will be used to pay the coupons of those who have the 2034 bond, which is a very, very good bond, by the way. But coming back to the 15-year bond, the planned new issuance of the 15-year bond, which will go until 2041, that bond is being issued in July, on July 1st, which means it will be paying coupons for the first 2 years in July and Jan. For us long-term investors, we already have bonds in Jan and July, so you'll be adding income in 2 months that are already crowded out by the 2034, by the 2039, by the 2043. And if you already have a 2034 bond, that means this bond will pay out in the same period as the 2034 bond, which is good. The good thing with this bond, the 15-year bond, because it's a 15-year bond, and the calendar, the annual year of Treasury bonds is 364 days, right? 364 days. What that means is that after 2 years, it will start paying in December and June. So it will be very good for planning. Very, very good for planning. Because it means that bond will pay you much more money in June and December, starting in 2027 December. Yes, because it will pay you on 31st 2026. It pays you on July, then it starts paying you June and December. So the potential new 15-year bond is a bond I would buy for long-term laddering in June and December, especially because it's a long-term bond. It would allow us to easily get some income in those months. So that is going to be the 15-year bond. But I also want to comment on new issuances. But let me first also bring the 20-year bond. Now, the 20-year bond, which means the current 20-year bond, which we know as the 2043 bond, is not coming back on the market. And that was expected. Actually, even the 15-year bond, it was expected. Why? Those two bonds alone contribute almost, each has already been issued by in excess of 8 trillion. So you do not want to create concentration risk at point of maturity. So you want to spread it out. And we did not have a bond in the 2040. We have just one, I think, one bond between the 2040 and the 2042. We don't have, I think, in the 2041. Then we don't have a bond in the 2044. We don't have a bond in 2045. So it's important to put a bond in the 2045 and start borrowing through that. The 20-year bond, per the draft auction calendar, it will be issued for the first time on July 15th. And the settlement will be on July 16th. It's interesting because for the month of July 2026, government plans to issue 3 auctions of treasury bonds. So far, at least by the draft calendar, things can change. On 1st July, they will sell some treasury bonds. Damn, that is so much borrowing. On 16th July, they sell some treasury bonds. And on 30th July, they do sell some treasury bonds. But my focus is on the 20-year bond. The 20-year bond will be opened for the first time on 15th July 2026. And that means, because of that, it means that bond will also be paying coupons in Jan and July. Damn! Bond investors who invest long term are going to die with money in Jan and July and May and November. At that point, everyone will be just celebrating and making money. Those months, people will be rich. If I'm to use that word, you know, because if it's issued, if the 20-year bond is issued on 16th July 2026, it means they would have locked it in to pay in Jan and July for the next 10 to 15 years before it changes to July and December and June. Now, those are the two issuances plus the 3-year bond, which will be a new issuance at the same time when they will issue the 20-year bond. Now, let me talk a little bit about new issuances, which is important. When we look at the history, especially the last 3-4 years, every time there is a new issuance of the bond, it beats the logic of the yield curve. Let's go back to the recent, as recent as the 25-year bond, when it was first issued in August. That bond, at the time, treasury bonds were trading at around 17 and above, 17.2, 17.3. So the anticipation in the market, especially for the new investors who don't understand the market very well, our anticipation was, if the 20-year bond is trading at 17.2, then the 25-year bond should bring in 18%. What? The thing brought in 16%. Actually, on the auction, the coupon rate became the auction or 16% and it became the yield. And the people who bought the 15-year bond, they got a 17.65%. The people who got, and the government rejected so much money to ensure the coupon rate stays down. That's how we ended up with the 16% coupon rate. We would have wanted a 17% coupon rate. There are 2 bonds or 3 bonds that have coupon rates above 17%, and very few people have them. There is an 18.5% 2042 bond. There is a 17.75%. It's a 2042 bond also. There is a 17.5%. It's a 2040 bond. Very few people have them. They issued makes maximum like 1 trillion, and they closed them out. So we had thought the 25-year bond was our chance also to get at an 18% coupon rate. In August, they rejected so much money to just keep the coupon rate down. When we go back to July 2024, when the current 15-year bond was first issued, At the time, the 15-year bond was trading at 16.5%. So our anticipation was maybe we might get a 16.25, 16.5% coupon rate. They ended up rejecting so much money and they locked us in 15.8. Now 15.8 is good. But that was not, because the new issuance of the bond, the coupon rate becomes its yield. The new issuance of the bond, the coupon rate becomes its yield. So it breaks certain logics on the new issuances. Then you go back to the current 20-year bond, the 2043, when it was first issued in 2023. At the time, a month ago, they had issued a bond at around 17.5% coupon rate. I think we were getting out of the inflationary factors which we had experienced because of the Ukraine and Russia war. So we had anticipated we were going to get a coupon rate and the yield of 16.5, a minimum. They rejected so much money and they forced the curve to be, the coupon rate to be 15%. So as you go into this auction, especially for the new issuances for the 15-year bond and the 20-year bond, I warn you, this is a clear warning from the experience we have seen. Interest rates, they force, because it's cheaper to have a lower coupon rate, even if the yield curve later improves. It's still cheaper for them long term. It locks in lower cost of making money. So the government, the fact that it's planning to issue new bonds of the 15-year bond and the 20-year bond, do not be surprised if the coupon rates and the yields of those two bonds end up being within 14% interest rate. Between 14.25% to 15%. I do not foresee those two bonds bringing in a 16% coupon rate, because on the first issuance, the yield, the cutoff yield becomes its coupon. The good thing is, it's not so good thing. The 15-year bond will be issued on the same day as the 5-year bond per the draft calendar. So that means if you don't want to take so much risk on the 15-year bond and which coupon it will bring in, you might have to go for the 5-year bond. We shall see when the final calendar comes, and we shall do our analysis as we do here and make sure people make a better informed decision as they invest in these bonds. But the problem is with the 5-year bond with the 10% withholding tax and the coupon rate of 15%, chances are that bond will be at a premium. The good thing for the 20-year bond, it will be issued at the same time as the May 2037 bond. I have that bond, but I have less of it. I've always wanted to have more of it. So this is a chance. So if this calendar stays as is, and in July 16th, the government wants to sell the 20-year bond at the same time as the 10-year bond, I'll go for the 10-year bond. At least for that, I know it is 16% coupon rate. Now, the chances of me paying a premium are extremely, extremely high. But at least it's a 10-year bond, which I know the coupon rate is higher, as compared to taking a bet on the 20-year bond, which they might squeeze its coupon rate to come down. But maybe I might split 50-50. I go 50 10-year bond, 50 20-year bond. That way, if the 10-year bond brings me a lower interest coupon rate, the 10-year bond I would have had my 16%. At least you know, on day one issuance of treasury bonds, there is no premium, there is no discount. Why? The yield to maturity or the cutoff yield becomes the coupon rate. You bid for 1 million, you pay 1 million. You bid for 5 million, you pay 5 million. There is no premium, there is no discount, straightforward. But I'm happy that they are bringing two bonds, the 15-year bond and the 20-year bond. They are very new bonds. They will be the first time they are issuing. I would have wanted the 20-year bond to be pushed to September, such that it pays us in March and September, or to be pushed in October, such that it pays us in October and April. And if the people at Bank of Uganda can see this, please think about it that way instead of crowding us out. But right now where we are, but if I look at this calendar and I look at majority of the people's portfolio, we are going to end up crowding out in the May and November and in Jan and July. Investors will be eating money everywhere. This draft calendar alone, it has 4 bonds. 4 bonds that pays in May and in November. It has the 2037. It has, which is the 10-year bond planned to be issued, reopened. It has the May 2032, which is planning to be reopened. It has the 2-year bond, which is planning to be reopened 2028. So 3 bonds, all of them pay in May and in November. Then the 10-year bond, the 15-year bond and 20-year bond, they pay in Jan and July. What happened to March and September? What happened to October and April? Bank of Uganda. People at Ministry of Finance, we want to ladder our coupons, please. Please, bring a bond that starts in that can pay us. Change one of these bonds. I'm happy you are bringing back the 25-year bond. Thank you. Because that bond is in scarcity, and right now it's trading at a premium because it's in scarcity. But give us something. Give us something that pays in May, in March and November, March and September, or April and October, without going to the primary, secondary market and buying it expensively. This is my feedback for this calendar. Otherwise, we are starting to get energized the Sukuku bond. We are waiting for the prospectus, the full prospectus of the Sukuku bond. We shall come and do full analysis of it. Thank you so much.